Let's start by clearly defining the terms you asked about. 1. Bitcoin dominance, or BTC.D. This is a key market metric that tracks Bitcoin's share of the total cryptocurrency market capitalization. It's calculated by dividing Bitcoin's market cap by the combined market cap of all cryptocurrencies. A rising percentage, like 60%, means Bitcoin is outperforming the broader market, while a falling percentage suggests capital is flowing into other assets. 2. Altcoin dominance and altcoin seasons. While not a single metric like BTC.D, altcoin dominance is reflected in the inverse of Bitcoin's share and through specific indicators. 1. The Altcoin Season Index. This is a tool used to gauge if an altcoin season is occurring. An index reading above 75 typically signals that a majority of the top 50 altcoins are outperforming Bitcoin over a 90-day period. A reading below 25 indicates a strong Bitcoin-dominated market. 2. The Total 3/BTC ratio. This is a crucial technical metric. It measures the combined market cap of all altcoins, excluding Bitcoin and Ethereum, against Bitcoin's price. A declining ratio for consecutive years, as seen from 2022 through 2025, indicates sustained altcoin underperformance.
Part 2. The 2026 Market Reality. The current year presents a complex picture, with analysts divided on the trajectory. The case for sustained Bitcoin dominance. Several analyses suggest Bitcoin will maintain its strength in 2026. A multi-year trend. Data shows that altcoins have underperformed Bitcoin for 4 consecutive years, 2022 to 2025. The Total 3/BTC ratio finished lower each year, meaning a unit of Bitcoin can buy more altcoin market cap than before. Institutional preference. Bitcoin is increasingly viewed as a safe haven during market uncertainty. The growth of spot Bitcoin ETFs has funneled significant institutional capital directly into Bitcoin, which can limit the liquidity available for altcoins. Analysts from the Block Research predict Bitcoin dominance will remain above 50% throughout 2026.
Regulatory advantage. Upcoming regulations like the EU's MiCA Markets in Crypto Assets framework, set for 2026, could create a two-tiered system. Bitcoin's established non-security status may give it a compliance advantage over altcoins, which might face greater scrutiny. Signs of a potential altcoin resurgence. However, early 2026 data shows flickers of change that traders are watching closely. Early 2026 momentum. The total crypto market cap surged past $3.01 trillion in early January 2026, with improved sentiment and decreased ETF outflows. Notably, Bitcoin's dominance fell slightly to around 58.96%, hinting at a possible early rotation of capital into altcoins. Institutional diversification. Some reports indicate that in Q4 2025, institutional investors began allocating a larger portion, up to 38% of new crypto investments, to altcoins, driven by interest in areas like decentralized finance, or DeFi, and tokenized real-world assets, or RWAs. Key resistance levels. For a true altcoin season to take hold, market watchers note that the total market capitalization needs to sustainably break above the $3.1 trillion level, which could act as a major catalyst for risk rotation. Part 3. What this means for investors. This tug-of-war between Bitcoin and altcoins shapes different strategic approaches. Navigating a Bitcoin-dominant market. In times of high Bitcoin dominance, a more defensive posture is common. Portfolio reallocation. Strategies often involve prioritizing Bitcoin's stability and capping altcoin exposure to manage risk. Focus on liquidity and majors. Investors may favor larger, more liquid assets. Capital tends to flow from smaller projects to Bitcoin during these cycles. Positioning for a potential altcoin season. If conditions for an altcoin season develop, strategies shift toward measured risk-taking. Sector diversification. Rather than betting on single tokens, diversification across sectors like Layer 1 infrastructure, such as Solana, DeFi, or meme coins, can spread risk. Disciplined entry. Traders emphasize confirmation over conviction. They look for sustained increases in trading volume and positive on-chain data before committing significant capital, using historical patterns as a reference, not a guarantee. Risk management is key. Using tools like stop-loss orders and maintaining a portion of the portfolio in stablecoins for liquidity is considered paramount due to altcoins' high volatility. To summarize the key 2026 predictions from experts, Bitcoin dominance forecast. Prediction, remain above 50%. Confidence level, high, based on institutional trend. Key driver, institutional ETF flows, safe haven status. Altcoin market outlook. Prediction, K-shaped recovery, winners and losers. Confidence level, medium, depends on capital rotation. Key driver, real utility. Prediction markets, DeFi growth. Overall market sentiment. Prediction, choppy H1, more bullish H2. Confidence level, medium, subject to macro factors. Key driver, regulatory clarity, U.S. policy, institutional adoption. How to interpret the chart. 1. Trend analysis. Downtrend. A consistently falling ratio, as seen from 2022 to 2025, signals a Bitcoin-dominant market. Investors see Bitcoin as a safer store of value. Uptrend. A sustained rise in the ratio would signal capital rotation into altcoins. This is a key technical prerequisite for a true altcoin season. 2. Key levels and breakouts. Support and resistance. Analysts identify historical price zones where the ratio has repeatedly bounced or reversed. A break below a major multi-year support level is a very bearish sign for altcoins. Momentum indicators. Tools like the Relative Strength Index, or RSI, can show if the ratio is oversold, potentially due for a bounce, or overbought. Application for investors in 2026. For your video, you can explain how traders use this ratio in 2026. A risk-on, risk-off gauge. Traders watch for a confirmed reversal and uptrend in the ratio as a technical signal that it may be safer to increase altcoin allocations. Patience is key. The multi-year downtrend means a single green week or month for altcoins is not a reliable signal. Traders wait for a series of higher highs and higher lows on the weekly or monthly chart. Combining with other signals. The ratio is rarely used alone. Smart traders combine it with the Altcoin Season Index to see if a majority of altcoins are outperforming, on-chain data like exchange outflows signaling accumulation, Bitcoin dominance chart for confirmation. In early 2026, the ratio remains near historical lows after its 4-year decline. Some analysts view this as a sign that altcoins are deeply undervalued relative to Bitcoin. However, most caution that until the ratio's chart structure shows a definitive change in trend, the burden of proof remains on altcoins to demonstrate strength. To summarize for your viewers, the total 3/BTC ratio is the technical scoreboard for the Bitcoin versus altcoin battle. Its persistent downtrend is the strongest single chart confirming the Bitcoin dominant era of the last 4 years. A reversal would be one of the most significant technical events to watch for in 2026. If you would like a visual sketch of what this ratio's chart typically looks like with key trend lines, I can provide that as well.